it's positive on the 4. Anyway, let's take a look at the analysis. We all remember that this market finished an A and a B, and we were expecting this C maybe to go down all the way to 0.77. It has confirmed that it has bounced at these levels. We need to internally segregate what is exactly happening at this level here in C, because we expect that a breakout is very quick and very imminent. It will test 1.3 and then break out higher to 1.4 and then fall back to retract at 1.25 and whereabouts of that, creating another shoulder here just below that neckline. We're seeing, of course, an inverted head and shoulders, multiple shoulders, before we move on higher to, if we get to win that liquidation case, Ripple gets to win that liquidation case against, this is the important fundamental driver impacting this, against the SEC, then we're looking, of course, at 1.7, the top of that ascending triangle altogether, and this becomes an ending diagonal, taking us to 2.3 and $3, if not much higher. All right, so let's take a look at the technical picture itself. This is the 4-hour chart. We just checked 4-hour chart is positive momentum. All right, so we expect, this is now positive momentum. We expect the correction C at least is over. Let's see what that means. This is that correction C that we're looking at. Okay, so we expect that C ended a while back. It's not shown here on the 4-hour charts. What we are looking at now is an Elliott structure, a 5-swing Elliott structure. So this is going to be labeled into 1, 2, and 3, and 4, and 5. Of course, with 3, 4, and 5 shown here in green are really highlighted because they are now the most important, as they are the advancing waves. But 1 and 2 here, down below here, are actually relating to the same wave groups. So 1 here and 2 here are relating to that 3, 4, and that 5. Of course, wave 4 bounced to the top of 1. That correction C in red that we keep looking at, the C here in red, we should have it labeled. It is at the bottom of this wave 1 here. Okay, so what we're actually seeing now is that the market has already finished wave 3, degree 3, of course, at the neckline. Because we are in an ending diagonal, we expect that we are in an ending diagonal. Okay, this is that ending diagonal here on the daily chart. This current Elliott structure will actually unfold. It's in 5 waves, but it's doing an A and a B and a higher degree C. You have that higher degree A, the higher degree B, then there's going to be another higher degree C. So what you are actually, it's not labeled here, but you're seeing an A and a B and the higher degree C. That would be 5 swings into wave 5 that is showing here. All right, and that higher degree C is going to be an A and a B in itself. We believe that actually B has concluded here. Now the market is doing higher degree C because of the positive momentum on the 4-hour chart. Okay, so that higher degree C will look of the same size like this B here and that A, but will of course break above A. That's why we expect a sudden breakout above level A. And that high degree C is going to be an A and a B, and then we're going to have a C. We're still doing level A here in brackets inside of that high degree C. Level A should, we just said earlier, C 1.35, 1.39, these kind of levels. We have it here at 1.30. You're looking at anything between 1.30 and 1.35, 1.39. Okay, so what is this level A all about? This segregation that we're showing here on the 4-hour chart, this is probably correct segregation. Level 1, of course, is at a neckline. We have a neckline here, so we're not going back below the neckline. Okay, even if it may look that we are moving a bit below the top of level 1, once we go to the 1 hour, you'll see that we're actually testing lower than level 1. This is only because we are in a triangle. So essentially we're doing an ABC inside of that A, and there will be another ABC inside of that B. You know, the market moves in fractions. But we have had this already related to the fibs, and you will find that there's a very strong or moderately strong bullish trend because the market keeps moving from one fib level to the next. So wave 4 here bounced at 38.2%, 0.86. Remember, that level was a very important level. There was a very strong bounce here. That was wave 4. Then wave 2 bounced at 50%, 0.96.5. Again, 0.96 was always actually an entry level for us. And currently the top of wave 1, all right, actually broke above that level 1.06. okay, remember we were trying to buy that level last Friday, 1.067. we actually did, we are now actually supporting at that level 0.618. okay, so this is a 1-2, this is a high degree 3, market is currently doing a 4. That 4 of course is going to be a bit lengthy until we have the correct fundamental driver to kick it up. Remember, we're looking at this kind of neckline on the left. okay, so you can get a very actually congested and lengthy and tedious wave 4. so here it is, of course, a bit downscaled or downsized. There's a 4A, 4BC, could be DNNE. Sometime this is going to kick up into wave 5, shown here in yellow. Again, it's going to be 1.35. That's our first primary target, and 1.30. What you would want to really do is always buy against the top of 1. That, of course, after you do your own due diligence and you're sure that this is really the right trade to be in. We expect this top of 1 to come in at 110 now, and 1.09, that actually is the top of 1 and internal 1 altogether. So we're buying 1.09, 110. Stop is right here is actually below level 2 altogether. As you can see, this 1-2 here. We could raise it higher, but we don't want to run into spikes. Remember, this is a triangular structure. So these are ABC swings actually, more than Elliott swings. So this level here comes in at 0.96. If the market should move higher, we're buying, remember, 110 and 109. We could move that to $1 as the market accelerates higher. So this is the main technical picture. Let's go to trade management. Okay, so we're having here a focus on that segregation. We are, of course, at the neckline. This is level 1, that is level 2, internal 1, 2, those are 3, 4, there's a 5. Level 3 is finished. That's why we're pushing deep into top of level 1 right now. It's a buy, of course. There's a 4A, there's going to be a 4B, there's a 4C. It could take more swings. We buy the top of level 1. All right, top of level 1, we'll have that actually pinpointed on a live chart to be very accurate. We would want to take profit at 130 and 135. That level here is 135 at that yellow arrow. It doesn't really matter the number of swings that we're going to be seeing. We're still going to be seeing the 4B and a 4C, maybe DNNE, then a 1 and a 2 and a 3 and a 4 and a 5 internally, of course. So you can imagine the gyrations that will be there. This is just a swing trade. All right, if you're going to be trading short-term profit trades, it's better to move to Ethereum. Okay, so let's go now to actual trade management. This is the same chart, of course, just taken down to the 1 minute time, 1 hour time frame. You're looking at 1.06 is the top of a 1. We did spike into it, you can see this, and bounced up. It does confirm this is the top of a 1. You would want, if you're not already involved, I believe we were involved in the market as of Friday. Maybe we shouldn't have a stop at entry at this current time, but we expect to be secure, even if we are in a very good entry at 1.07, 1.06, or even 1.09, or maybe 1.05. Very good entry actually, right at the top of 1 level. We would expect to hold. We're going to 135 now. We're quite probably positive about this, at least 1.27 within that Elliott structure. We're looking at level 5 at 1.27. Of course, as we move more forward in time, if we project forward in time, we're looking at 130 and 135. All right, so we have here a trade matrix. It's at 110, but I believe if you're about to join the market, you could get a bit lower than 110. You're looking at 1.07 actually, and 1.08. The stop can be at 1.02, this level here, right below level 2. We would like to have it for the time being at 0.95 so as to avoid spikes. This kind of stop really could turn this into an A and a B and a C. 4A, 4B, 4C becomes a zigzag, and the whole wave structure will become changed. And the market will still rise, become bullish, but it would just take more time. So we'll just be out of the trade, that's all. Targets are over here showing at 1.27, but we know that we can let it run. you could actually leave the target open just in case there is any breakout in that liquidation case against the SAC. Alright, let's go live and check it then. Okay, so now we understand what is exactly happening. We are fortunate enough to be right bouncing out of 1 right now. Very ideal and very actually academic. Okay, so it's so academic that even the candle close itself is right on top of level 1. Not 1 inch, not 1. This is the level 1 that we're talking about. The bounce did dip into 1, but the candle closed out of 1. So if you want to join the market, it's right now 1.06. It's 110. I'm sorry, 110.609. This candle did 1.0665. This is a 4-hour chart, so this is a bit high. Okay, let's take a look at. So we still don't have positive momentum on this, and we could expect them to go still lower until we get into positive momentum. So let's take a look at 1 again. We did a miscalculation, maybe not. So maybe this is the top of 1, maybe this is the top of 1. This is the top of 1, comes in at 1.066. so that is because we did get a bounce at 1.066. okay, so this is now a 15-minute chart. So this kind of momentum reading now means that it is not yet mature, it is not yet confirmed, but we all understand what can happen. We know the drill now. If this momentum moves above overbought, falls back, this is an internal, or doesn't even fall back, this is an internal 2 signal. There's an internal 1, internal 2, there's a neckline right here. Okay, and the market will be progressing higher. We would want to look at the 15-minute chart to be able to evaluate wave 1. So in the 15, this is 1 hour, sorry, take it up to down to 15 minutes. You can see we're moving towards the 0 line, and we expect to move above, on momentum that is. We're moving on momentum towards the 0 line, expect to move above the 0 line, maybe reject at this overbought level. If this is gonna be the case, we will be at the moving average, reject just above the moving average. This is a wave 1 confirmed. If what we're seeing on the 5 minutes becomes consistent positive momentum like we just shown, and this kind of wave here becomes your wave 1, you just want to buy 50% into this wave, or 61.8% onto this wave, or even 78.6% into this wave. Let the profit run, of course, all the way to 1.35. okay, and we have a stop at $1. all right, so let's take a look at oil. Let's take a look at questions first. Okay, so we have a question on oil and cryptocurrencies and Bitcoin against the United States dollar. Okay, so we already done the cryptos and we're finished with the cryptos, and we did a lot of elongation on the cryptos, so we just have to keep that to the end of the session, maybe go over them one last time very quickly towards the end of the session.